Okay, let's begin the day, and we have plenty of stocks to talk about, so without wasting any time, NTPC is the first one on our radar. Vivek is here in the studio to tell us why he's watching that one. Vivek, good morning.
Well, good morning. NTPC declared its results and slightly subdued set of results this particular quarter, against what was analyst expectations. However, given the regulated nature of the business, largely in line with what analysts were penciling in terms of the regulated equity as well as what was the capacity available. Now, talking about the numbers themselves, revenues were slightly muted. Unseasonal rains actually impacted the demand this time around. Along with that, lower generation trends on the back of lower demand also impacted the top line. However, EBITDA was aided by operational performance in terms of lower fuel costs as well as lower expenses. Average tariff for the quarter gone by was down 1% on a year-on-year basis, 4.53 rupees per unit versus around 4.57 rupees per unit last time around. So revenues down 2.3%, EBITDA higher by almost 17% on a year-on-year basis, much better than our poll. Margins, higher by almost 450 basis points, and profitability up almost 10%. Expecting a slight negative, reaction as far as the stock is concerned today because the stock had run up in the event to this particular results.
So that way, so not bad. Operationally, at least, it's a strong performance. Thank you for that. Mangalam, how was Marico?
Well, Marico results were largely in line because analysts were penciling in what the company had said in the first quarter update itself, but the management commentary was rather positive. There was a beat on the bottom line led by higher other income. So let's run you through the numbers. 23 crores on the top line. Street was working with a number of 2,500 crores, 574 crores on the EBITDA. The Street was working with a number of 580 crores, not too far. And the net profit came in at 436 crores versus expectations of 416 crores. That beat is because other income came in at 46 crores versus 17 crores itself. Domestic volumes grew 3%. Again, the Street was working with a number of 2 to 3%. But gross margins, they improved 550 basis points. The company invested some of that back into ads, and as a result of which, EBITDA margins were up around 220 basis points itself. Management commentary, here's where the positivity was. They said that they will improve their volume trajectory going forward. Revenues will actually get into positive terrain in the second half of this year itself. Operating margins for FY24 should improve by about 150 basis points. And at the same time, we will see, 850 crore revenue coming in from their food business itself. So see some green on the stock, despite, remember, the stock having run up about 6% in the last couple of days before the numbers.
All right, thanks very much for that. We've seen some earnings upgrades coming through for Marico, but as Mangalam said, the stock has done well coming into these earnings last few days. Abhishek is now joining in. He's got his plate full with lots of earnings, SBI Cards, IDFC First Bank, Piramal Enterprises. Abhishek, good morning.
Morning, Prashant. So to begin with, SBI Card, the net interest margin continues to remain on the lower side. It is at 11.5%, which is one of the lowest that you are seeing in the last 24 quarters. The revolver rate, that continues to remain static at the lower end of 24%. So for 4 quarters in a row, it's been at 24%. Credit cost is at 6-quarter high of about 6.8% when compared to 6.3% in the previous quarter. Asset quality, slight hiccup over there. You are seeing increase in gross NPA ratio. However, the most disheartening point is that the new accounts, that trajectory continued the downward momentum. It was down 20% quarter on quarter. This time around, Q4 was down about 16%. And PAT has come in at 593 crore. Motilal Oswal was working with a number of 605 crore. IDFC First Bank, inline set of numbers. Asset quality has improved. Gross NPA ratio is down to 2.17% when compared to 2.51% in the previous quarter. Even the retail gross NPA is down about 12 basis point quarter on quarter. The net interest margin largely in line with what you are seeing with other peers, a slight decline over there on a sequential basis due to cost of funds rising. PNL almost in line with our poll, both in terms of NI and PAT. Piramal Enterprise, now that's one of the worst results that I've seen in BFSI space in Q1 FY24, given the fact that they have lost out on interest income, both YOY and quarter on quarter. You are seeing a decline of 15% and 10%. So gross NPA ratio, that's declined 100 basis point quarter on quarter to 2.8%. The disbursals have picked up. It is at 5,707 crore, up about 132% YOY and 69% quarter on quarter. AUM is down about 0.1% YOY and about 0.1% sequentially. However, the net interest income is down 31% YOY and more than 25% sequentially. Even the operating profits are very weak, down about 58% YOY and about 43.5% sequentially. So expect the stock to be weak in trade today. Back to you.
All right, thanks a lot. That's a mouthful. We'll keep revising those stocks, of course, but thanks, Abhishek, for that. Let's go across to Surbhi. She's tracking a couple of them as well. Star Health, United Breweries and MCX. Surbhi, over to you.
Thanks so much for that. So United Breweries, it was a weak set of results and that was largely led by lower volumes. Now revenue was down 7% on a year-on-year basis. The gross profit margin was down nearly 400 basis points and the management did say the volatility in the raw material prices will continue going forward. EBITDA was down nearly 16%, margins were down 110 basis points. Volumes were down 12% on a year-on-year basis. The net realizations though was up nearly 6%, but that was due to a price increase that the company had taken a few months ago. Star Health, it was a good set of numbers. The gross written premium was up 20%. The net earned premium was nearly up 13%. The combined ratio that has improved came in at 97.8%. The expense of management ratio was maintained by the management and the claims ratio has come in at 65.4% versus 66.28% same time last year. And MCX, the numbers were largely in line with estimates. On a sequential basis, the numbers were looking good. The revenues were up 9%. The software expenses were up nearly 2% and most of it is priced in by the stock as well. The EBITDA is up 5 times on a sequential basis and the PAT is up 4 times. Now the futures volume that was up 2% sequentially, but the options value that came in strong, came in up 33% sequentially.
All right, Surabhi, thanks very much for that. So keep an eye on MCX as well. Now some news flow on RVNL and Siemens. RVNL has given an update on that Vande Bharat order and shareholders at Siemens have said no to the sale of a business on a slump sale basis. Valuations are not what they like. Vivek is here with more. Vivek.
Well, good morning. Absolutely right. So RVNL, there was quite a bit of uncertainty regarding, what was the exact nature of the partnership between the company as well as the Russian partner. Remember, initially RVNL and the Russian partner emerged as the lowest bidders as far as, both delivering as well as operation as well as maintenance of 200 Vande Bharat sets. Initially, RVNL had a 25% share as far as the JV was concerned. However, newspaper reports had indicated that RVNL had actually asked the Russian partner for a higher share as far as this particular JV was concerned. However, in a clarification yesterday, the shareholding agreement has been signed and RVNL will now have a 25% stake in the JV. Now, coming to Siemens, a very interesting and important development coming in over there. The shareholders have voted against the company's proposal to sell both the low voltage motors business as well as the geared motors business to the parent entity. This particular, sale was going to be done at a valuation of 2,200 crore, and both analysts as well as shareholders had opposed this particular move, given the fact that the implied valuation for this particular stake sale was much lower than what the Siemens stock was currently trading at. In fact, Jeffrey says that the implied loss to the shareholders was close to 189 rupees a share, as the proposed sale value was at an EV to sales of close to 2.1 times versus the company multiple which trades at close to 8.4 times. So expect Siemens to be one of the top movers in today's trading session.
Oh yes, absolutely, Vivek. And this was a big one. Now remember the way the stock sold off because people were citing perhaps a little bit of a oversight in terms of keeping minority shareholder interest in mind, and they've voted down that proposal. So thanks very much for that. By the way, on RVNL, that's also a big development and a lot of clarification on Vande Bharat. We will discuss it with the management as well, all the finer points. So Rajesh Prasad, Director Operations, RVNL, joins at 9:30 to talk about how they're planning to go ahead with their JV partners for the Vande Bharat order. Okay, quick recap of our top stocks to watch. The ones that have positive news flow are Marico, IDFC First Bank, Star Health, MCX, RVNL and Siemens. The stocks that have negative news flow around them are NTPC, SBI Card, Piramal Enterprises and United Breweries.
Okay, let's take a short break on that note. Up next, we'll be joined by market expert Prakash Diwan to discuss fundamental stock analysis. We also have the management of Route Mobile, Rajdeep Kumar Gupta, who's the MD and Group CEO of the company. He'll join in to discuss the company's Q1 performance in just a bit. Stay tuned.